Okay, everybody's here. So thank you very much for coming along to this webinar on the VAT domestic reverse charge. I hope that you'll get some value out of this webinar, and just to let you know, there are 17 pages of notes with cross-references to the construction industry scheme. So there's going to be quite a lot to get through. We won't be able to cover every single aspect of the reverse charge, but we'll get a good coverage of the basics and some practical stuff that you need to do to get ready for the 1st of March 2021. The webinar will be about an hour, or will be an hour long, and we'll include the opportunity for you to ask questions. There's a question box on the bottom of the screen, and I'll go through the questions at the end. If I don't manage to answer your questions, I will get in touch with you. And the other thing that I will do is I will send you an email with the links to the various bits of legislation and the websites that I will show you screenshots of. So this has been a long time coming. The reverse charge for the construction industry has been postponed twice. As we all know, it was due to be implemented on the 1st of October 2019. And then within a couple of weeks of that date, it got postponed to the 1st of October 2020. So far, there's been no indication that HMRC are actually going to drop it or postpone it. But within 10 days of HMRC, or the boss of HMRC, issuing a letter saying that the self-assessment deadline would not be extended, they did actually extend it. So we'll just have to wait and see. But I think we're going to have to prepare now, because it is really a month away, or just a bit less. So on the watching the webinar today, as well as some construction business owners, we have a number of finance experts who I'm guessing will be interested in the cash flow effects of the reverse charge. And what I'm going to do now is just go over basically what we'll be covering. So we'll be kicking off with why the reverse charge scheme is being introduced, what it means for the construction industry, going through a simple example which then will help you hopefully put into context all some of the theoretical bits and pieces and stuff that you need to do to prepare to be ready. So then we'll go work out when you have to apply it, the records you need to keep, the exciting accounting for the reverse charge, invoicing, accounting system, and VAT returns, then the effect on businesses' cash flow, and HMRC's view on how they will police things going on. We will then have a question session, which I am hoping will be at around about 10 to 1. So there'll be sort of 10 minutes to answer any questions. But as I said, if I don't manage to answer your questions, I will do a follow-up email or get in touch with you to see how we can help. So let's move on. Just wanted to give you some context of Andrew Price & Co. and what we're about. By the way, that picture is a little bit old. When I say old, it was taken in March when we held our construction evening get-together. We had a couple of people join. So to support our clients, we've got 3 chartered accountants. We're also a training office for ICAW, and we've actually got a trainee chartered accountant, as well as 2 additional AAT qualified accounting technicians. We've got 26 years experience of helping construction industry clients, and basically we help our clients grow, be more profitable and pay less tax. Quick example of probably someone that needed a lot of help from us when they started. We took on a construction industry client that in the previous year of taking him on made a £21,000 profit, and he joined us 10 months into the next financial year, so we didn't have that much opportunity to make an impact. But the following year he had increased his profit to £94,000 through working closely with us. We helped him by analysing the numbers on a quarterly basis with management accounts and improvements to his systems and processes. This built a springboard for much, much better things, and we've got a happier business owner, and he's now finally getting what he wants from the business. In terms of growth, we do start we have businesses that have grown significantly. A client of ours started off with a 98,000 turnover and is now up to 1.2 million. And it's allowed them to get the financial resources, and they've fulfilled one of their dreams, which is to build a grand design home. We've helped them with their growth and profitability, mainly through management accounting and forecasting. So we work with business owners who want to grow, be more profitable, as this gives them the resources to help them make the choices they want about their lives, and that's what's important to them. And as well as that, we do the usual tax stuff. So now, moving on, why the change? The reverse charge. The big reason for the change is that HMRC have identified that this is an area where they have suffered as a result of fraud, and they reckon that they are losing about £100 million a year. Basically, what happens is that a VAT registered construction business will provide services to another one. They will get paid the VAT, and their customer claims back the VAT, and they basically run off with the money. The sort of thing that could happen is that the directors take the money out, and then the company becomes insolvent, and basically, say, HMRC lose it. And the idea of the reverse charge is to stop the VAT actually changing hands, although the VAT is accounted for. With this, the HMRC have used the reverse charge in telecommunication services, mobile phones and computer chips. But this is the first time I feel that they have taken it to a completely different sort of industry, and it is going to impose a lot of work on the construction industry, a lot more than they've actually been used to. So the reverse charge puts the responsibility for accounting for the VAT onto the customer. The supplier will not charge VAT and will not be paid VAT. And the domestic reverse charge will only affect supplies that are at the standard rate or reduced rates, where payments are required to be reported through the construction industry scheme. So it doesn't affect zero-rated new build work. So what we will look at, as I say, is we look at the documentation records you need to keep. And we're going to, so we will look at an example on a simple example, first of all, to give you the context. But the effective date is the 1st of March 2021. So for invoices that are caught under the new rules, any invoices that are dated before the 31st of March, sorry, the 1st of March 2021, the normal VAT rules will apply, and you should charge VAT at the appropriate rate on your supplies. On or after the 1st of March 2021, the domestic reverse charge will apply. And what you need to be careful of is the sort of the tax point on this, because that becomes due when a VAT is issued or payment is received, whichever is earlier. So you may want to sort of have a look at your invoicing in the month running up, just to make sure that you may or may not want to deal with something through the reverse charge to make your life a little bit easier. So we've got a simple example here. We've got John the roofer. His customer is a main contractor. John makes supplies that are within the scope of the construction industry scheme. The supplies are standard rated. His customer is VAT registered, and his customer is also registered for the construction industry scheme, and the customer is not an end user. An end user is basically someone who doesn't make an onward supply of construction industry services, and we'll have a look at the definition of that further on. So at the moment, what John does, he'll invoice the main contractor £100,000 plus VAT per month on a normal VAT invoice. So that's £100,000 plus VAT of £20,000. He will receive cash of £120,000, being the £100,000 plus the VAT of £20,000. From 1st of March 2021, John, caught by the reverse charge, invoices the main contractor £100,000, no VAT. He will receive £100,000, and one of the things that John's going to miss out on is hanging on to his £20,000 for a number of months before he has to pay it over to HMRC. He will also issue a reverse charge invoice with no VAT to his customer, and he will have to have records to prove the non-end user status of his customer and that evidence that his customer is VAT registered. So what we're going to do now is have a look in more detail at when the reverse charge applies. So we're going to be looking at an HMRC flowchart, which is at the back of the guidance notes from HMRC. And we will use this flowchart in a template that I'll show you later on, that can be used to keep the relevant records that you will need to keep when operating the reverse charge. So we'll have a look at this flowchart. And this is looking at it from the perspective of a contractor who is supplying services. So what you need to do is basically get from the top to the bottom to make, on the basis that it will apply. So the first question, does the supply fall within the scope of the construction industry scheme? Now, I will just move ahead and this is a list here of everything that falls within the scope of the construction industry scheme. It's come from this, the construction industry scheme, a guide for contractors and subcontractors. So within here, it actually tells you or helps you answer the question. Just go back on the flow chart. So does the supply fall within the scope of CIS? If it's no, normal VAT rules apply. If yes, you move on to the next question. Is the supply standard rated or reduced rate? So is it at 20% or 5%? If it's no, say for example it's 0 rated, I'm going to say a new build, it would go through onto normal VAT rules. So 20% or 5% reduced rate VAT. If it's a yes, go down to the next question. So is your customer VAT registered? Well, one of the things, the chances are that your customer will be VAT registered. If it's no, normal VAT rules apply. But one of the things that you're going to have to do moving forward from the 1st of March is actually get proof that your customer is VAT registered, and you need to have a record of that. So just moving ahead here, you can find out if somebody is VAT registered or get a record of it by looking at an HMRC website. Now, one of the things that I would point out, if you look at, if you get this set of guidance notes, it does actually refer in here to a website, and there's a hyperlink on the notes, to an EU website, which I'm going to show next. So this is what HMRC had previously been directing people towards. You pop your customer's VAT number in there, and then it comes up and gives you confirmation that it's real and the name of that person. So you could have kept that for your records. But other guidance actually refers you to the correct website, which is this one, which is check a UK VAT number. And then again, I'll pop the link for this in there. Now, one of the things that you need to do with checking the VAT number, you need to actually get proof of that. And you can do one of two things. So if you click Start Now, and you go onto this page, go onto the next page, it says, what is the UK VAT number you want to check? So you pop your customer's VAT number in here. And if you want to retain proof for HMRC that you've actually checked that VAT number, you would tick that box there and put your number in there as well, and then you will do the search. And that will be evidence to HMRC that you've actually checked it. The other thing that you could do is actually just take a screen print for that. Okay, so I'm just going to go back now to the flow chart. So, is your customer VAT registered? We've dealt with that. The next thing is your customer registered for CIS. So the way that you probably know the answer is yes, but again, you need evidence to back it up. So what you do is you go to HMRC and basically go to the website where you verify, actually, I haven't got that, I thought I had that one on here, but you go to this website here, and the information that you'll need for that is depending on the type of entity that you're dealing with. So whether it's a sole trader, partnership, or a company, and then you basically go on there and get a verification. And again, I would recommend that you have a screen print for that. So once we've confirmed the fact that your customer is registered for CIS, if it's a yes, we carry on. No, normal VAT rules apply. Question 5, has your customer provided confirmation that it is an end user? Now, first of all, you really need to know what an end user is. So for reverse charge purposes, consumers and final customers are called end users. They're businesses or groups of businesses that are VAT and construction industry scheme registered, but do not make onward supplies of the building and construction services supplied to them. The reverse charge does not apply to supplies to end users, where the end user tells their supplier or building contractor in writing they're an end user. So really what you need to do is get written confirmation from your customer that they are not an end user, to be safe. The other situation that could cause a bit of confusion is where, for example, a bricklaying company does work directly for a builder on the builder's business premises. Here, the builder would be an end user and would have to be invoiced in the normal way for VAT. So it's really being careful about not being aware all the time about who you're invoicing and why you're actually invoicing them. So what we have put together for our clients is a spreadsheet, and this basically this uses the principles of the flowchart so that they can log their customers and then go through all the questions and keep the relevant records. Then when it comes to invoicing, you've got something perhaps to refer back to when you do that. So it's quite straightforward. You put the customer name in, customer reference, and you could sort of perhaps download this from your accounting system, or when you take on a new customer, and then basically answer the questions which have been derived from the spreadsheet. So things that we've put up here, we've put like hyperlinks, because this is just a screenshot, not a live spreadsheet. We put a hyperlink through to the relevant web pages for people to actually get the verification there. And you can sort of add information, you know, sort of any numbers or reference numbers in additional columns there. So this would be, you just keep a record of this, and you could mark it green for reverse charge and red for not reverse charge, but bearing in mind that there may be odd occasions when you have customers who would normally be under the reverse charge, where the odd invoice would come outside of the scope of that. One of the things that HMRC sort of recommend that you do is that you actually keep, that you check this annually, and I would, it is something that you would need to do for all new customers. So we're actually getting where we do bookkeeping for our construction industry clients, we're actually filling this out now, and so that come the 1st of March, when it comes to the invoicing, we're all ready to go. Okay, So these are just the slides that I referred to. Again, I'll give you all the relevant links to these. So just as a summary, you must use the reverse charge from the 1st of March 2021 if you're VAT registered in the UK supplying building and construction industry services and your customer is registered for VAT in the UK. Payment for the supply is reported through the construction industry scheme. Your supply is standard or reduced rate. You are not an employment business or supplying staff or workers or both. And your customer has not given written confirmation that they are an end or intermediary user. Right, so what you'll need to do is check your customer has a valid VAT number, check your customer's CIS registration, review your contract to decide if the reverse charge will apply and tell your customers. Ask your customer to confirm whether they are an end user or intermediary supplier, and you need to find out how to record the reverse charge in your accounting records, which we will come to. So this is basically looking at it from the other end, from a supplier, the person receiving the goods. So is the supply made that you're receiving made by an employment business? That's basically just providing staff. If it is, then the reverse charge does not apply. Oh, and say this particular annex again is at the back of the main guidance notes. Is the supply received within the scope of CIS? If it's yes, you carry on. If no, the normal VAT rules apply. Is the supply standard rated or reduced rate? If it's no, then, and it is this, then you carry on with a yes. I have confirmed with the supplier that I am an end user. If you have, then the normal VAT rules would apply. And if it's no, the domestic reverse charge applies. Now, again, we've got something that suppliers can use just to record things, because one of the things that I think would be important is you need to check what people supplying you and that they've got their ducks in a row, because really you don't want their admin problems to become your admin problems. So again, it's just supplier name, supplier reference, and then just going through the questions here. Right. So you say you must use the reverse charge from the 1st of March 2021 if you're VAT registered buying, building and construction industry services, and the payment for the supply is reported through the construction industry scheme. The supply is standard rated or reduced rate. You're not hiring staff or workers or both, and you are not the end or intermediary user. And so that's looking at it from the perspective of the person receiving the services. What you'll need to do is, again, check your supplier has a valid VAT number. Tell your supplier if you're an end user or an intermediary supplier, as the reverse charge will not apply. Ensure your accounting system can deal with the reverse charge. Make sure the invoice you receive is correct, and we'll be going on to invoicing shortly. And check that the list of services covered by the reverse charge and what you're getting is within it. So we're going to move on to the accounting for the reverse charge. You need to make sure that your invoices show the reverse charge applies. You need to be able to enter the invoice correctly onto your accounting system and then ensure that your VAT return is correct. So what we have here is a reverse charge invoice. It looks pretty much like a normal VAT invoice. And remember when we looked at the example with John, basically there was just the net amount and no VAT. So what you need to do is you need to have an invoice. Although it actually doesn't say there's any VAT, you need to actually specify what the correct rate of VAT is for the service that you are providing. The reason for that is so that the person who you send the invoice to can actually do the correct reverse charge. And you will see that when we come on to the accounting side of it. So here in this particular example, they've actually put the rate of VAT, but they haven't put the amount of VAT, and they have specified the reverse charge applies. And I will talk about the specific wording in a minute. And so down here, we've got an example of a 5% rate. Say no VAT is charged on this invoice, but the one thing that we need to show on there is the relevant wording. And there is standard wording shown in the guidance, but wording sort of like this is acceptable. And when it comes to your accounting system, we'll have a look at that in a minute. You're going to have to be able to, you're going to need to have to set up templates. And there are going to be different ways to actually deal with that. Section 14 of the long guidance notes actually gives you the real detail on what needs to be included on an invoice, and this is a particular example based on that. So when it comes to the accounting side, we use principally zero. Now, what I'm going to say now will apply probably equally to QuickBooks and to Sage. With Xero, they've already got the reverse charge already set up. You basically just have to go in and add the appropriate tax rates. And if you use Xero and you sort of not quite sure about that, you can give us a call and we can tell you basically where to find that, and then for you to get that added into the rates on your accounting system. But one of the things that you can do to actually make your life a little bit easier with this is, once you've established what the normal position is with a customer, you can say within Xero and probably with QuickBooks and Sage, is set up a product which will bring up on the invoice the required wording down the bottom here, and with the product would also bring up the appropriate rate. So when you've got the rates here, you've got these two rates at the top would apply to the person effectively selling the services, and these rates at the bottom would be applied to the person receiving the services. So as I say, going back, you could set up a product which brings up for you the automatic wording. And then above that, you could have a free form bit to put the description of what the service you've actually provided. Alternatively, you could use a template, and you just select the appropriate template based upon the invoice that you're going to produce, whether it's a reverse charge or a normal one. But for me, I think there's a degree of neatness with using the product thing. Okay, so that's about issuing the invoices. Now, the next step then is actually looking at the VAT return, because with things like Sage and QuickBooks, you will, once you've put the invoice in, if you've set it up with the appropriate codes, it will actually put everything into the correct place for you. So this is what it's going to look like when you do a VAT return. And this is on the basis of the person buying the services or the customer, because this is where probably the biggest changes will occur. And what will happen is that, looking at an example of £100,000 net, you have £20,000 and it's standard rated. You have £20,000 showing as VAT due on the sales in box 1 of the VAT return. And then you have £20,000 shown as a deduction on the purchases. The net effect on the actual VAT payable to HMRC is nil. Then you end up with your box 7 figure for your purchases being the net value of your purchases of £100,000, which is pretty much the same as it would have been before. So this is why the reverse charge invoice needs to show the appropriate rate, so that the person who's actually going to operate the reverse charge can account for the correct amount of VAT. So looking at it from the perspective now of the person who is making the sale, you don't actually declare, there's no VAT declared at all. All that happens is that there is a box 6 figure of the net amount of the sale. So in this example, £100,000. And basically that's that. There are the odd things. If you cash account for VAT, this item will appear on the VAT return when the invoice is paid. But if you're not, then it goes up on the invoice date. So with credit notes, if a supplier allows a credit note to a customer and that customer can reclaim all the tax on their supplier's input tax, you do not have to adjust the original VAT charge as long as both the supplier and the customer agree not to do so. If these conditions are met, this concession can also apply to reverse charge supplies. But I would recommend that you look at the detailed guidance on this when it comes to this. If you did actually issue a credit note, then you would have to show that that credit note, the original invoice was, or it is in respect of a reverse charge, and you would have to show the reductions as applicable to boxes 1, 4, and 7 on the VAT return with the appropriate wording. So basically, it's a reverse of 1, 4, and 7 on there. But it would look like this, but it would be shown, you'd have credit notes along the top. Okay. So what we recommend that people do is that make sure that you are not charged VAT when the reverse charge should apply. So you check all the invoices that you get, because if you receive an invoice that incorrectly shows VAT and you pay the VAT and you claim it back, HMRC can come along and assess you for the VAT as if the reverse charge had been done correctly. So you basically have to then pay back the VAT, and then you be going back to your supplier and say, can I have the VAT back, please? So it is better to just make sure that everything that comes in is correct before you process it. Also, I say again, it's just double checking the nature of work. Check the work on the invoice correctly comes within the scope of the reverse charge. Now, one of the things that is very unlikely, and I'm not going to spend a lot of time on this particular point, if you use the VAT, if you're in construction and you use the VAT flat rate scheme, then the reverse charge doesn't work with it. So what I would say is, if you are on the VAT flat rate scheme, speak to your accountant or us, and we will tell you what you need to do to put yourself in the position so that you don't lose out. So the next thing that we're going to talk about is cash flow. Some businesses will be affected by this in terms of cash flow. And in our example of John the roofer, basically, he is going to miss out, excuse me, on VAT. So he could end up, on average, in terms of working capital, missing about £40,000, because each month he would be collecting in VAT and then he pays it out in month 4. And I've got a sort of a cash flow forecast here, which I've actually done to prove this, but it's a bit, a lot of figures on the screen, but really cash flow is important, and some businesses are going to be affected. So the situation could be even worse if John has a lot of materials. So there are a couple of solutions with cash flow. Well, first of all, I would recommend that businesses, if they think they are going to be effective, do a cash flow forecast. This will identify perhaps the size of the problem. It doesn't have to be anything too sort of fancy. It can be done on a spreadsheet quite easily, just to get an idea of the size of the problem. So solutions could be, if you're going to be in the position where you get a reasonable amount of input VAT back, you could go on to monthly VAT returns, which would mean 12 VAT returns a year instead of 4. Or look at different sources of finance. We are coming up to, well, we've got, at the moment, there are bounce back loans and CBILS loans available. They are around at the moment until the 31st of March 2021. And they could possibly be an easier source of finance, but it would be appropriate to speak to a finance professional if you have got, or you think you are going to have a problem, to see what they can, how you can be helped. So you could be looking at your bank with an overdraft, you could be looking at an independent broker, or you could have a chat with a professional like your accountant. We have links with various sources of finance providers. So, you know, sort of, it's something that you do need to consider. Right, I'm on slide 39 of 45. I'm on 44 minutes. I think I'm going to be able to do it within sort of the time. Crikey. Okay. So, HMRC's view. This is a quote from HMRC. Basically, HMRC understand that implementing the reverse charge may cause some difficulties and will apply a light touch in dealing with any errors made in the first 6 months of the new legislation, as long as you're trying to comply with the new legislation and have acted in good faith. So I think if you start to do the listings of your customers and start to do the changes in your systems and processes while you've got time, that will go a long way towards that. But they say any errors should be corrected as soon as possible, as the longer they are underdeclared or overcharged, sums remain outstanding, the more difficult it may be to correct or recover them. And HMRC may assess for errors during the light touch period, but penalties will only be considered if you are deliberately taking advantage of the measure by not accounting for it correctly. So really, it is a case of it is better to get it right first time. If errors are made, it looks like HMRC will be looking for them to be corrected, and they are saying that they may actually do assessments for errors as well. And then you've got, if things aren't done correctly, you may end up having to go back to customers to get money, which may be difficult. So it is better probably to try and get it right first time. In terms of the information, the one thing I would say, and I'll give you the link for this, this is a must read. The technical guide gives you pretty much every single circumstance that you would come across in relation to the operation of the reverse charge. There are other guides that expand on certain aspects, and again, I'll put links to those in. But there's no, you really do need to sort of do your homework on this. So the next steps, really, the next steps is to work out a system based on the flowcharts to review each supplier, customer, and contract, and keep a record of the information you've used to make your decisions. Don't wait for customers and suppliers to do what they need to do. Take action yourself, as you do not want their administration problems to become yours. Ensure your accounting system can issue the correct invoices and account for the VAT correctly on your VAT returns, and review the effect of the changes on your cash flow and take action, including finance arrangements and the possibility of switching to monthly VAT returns. So we're here to help with accounting systems, VAT and CIS processes, cash flow forecasting, profit improvement, business growth and tax saving. And any questions that you have in relation to this, then we can deal with some now, and or you can call me or email me.